Hi, this is Kerry Artak with Wicked Stocks, bringing you the daily Tesla report for Monday, February 26th, 2024. But before I walk you through the charts, as usual, just want to encourage you to please click like if you haven't already, subscribe to the Wicked Stocks YouTube channel, share the content if you would with friends and colleagues, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this one. Daily analysis in the SPY and the Triple Q, that is the S&P 500 and NASDAQ 100 ETFs. Weekly analysis in the S&P 500 Index, the NASDAQ 100 Index, the Long Bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube. That is 8 a month that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor. We're always looking for at least 20% moves on those stock picks, and you can check out all of this for no cost for 5 days. We offer a 5-day free trial up front with a wickedstocks.com subscription. So sign up for wickedstocks.com, check it all out. If you don't like what you see within 5 days, you can cancel your subscription at no cost to you whatsoever. Let's take a look at the charts. Start with the big picture as usual, work our way into the day itself. This is a weekly bar chart, goes back several years, but what I'm pointing on here is really a 7-month channel top that comes off that July 23 high. We've hit both extremes several times. The most recently to the upside was the 251.76 descending channel top in late December. I believe that was the Christmas week. We hit this formation, which was then in the low 260s, as I recall. And at the time that we were testing it, we mentioned how following a testing of the 251.76 channel top, you should allow for bearish retracement, bearish rotation back to the channel base, which did occur several weeks ago, now at 168.82 on the weekly chart. On the daily chart, you'll find it at 170.19. You can see these levels accounted for down here in the lower right in your support and resistance column. 4-star support, meaning can contain selling pressures on a multi-week basis, monthly basis. And following a testing of that channel bottom, we've been mentioning how you should now allow for upward retracement. We don't see a clear indication of it. Just as we were testing the upper area back in December, we didn't see a clear indication for bearish rotation until we violated rising speed line and channel support. As you recall, if you've been watching the series now for the last few months, you know what I'm talking about. That then did clearly indicate the 168.82 channel bottom, which we did test several weeks ago. We also tested the 5/8 downside Fibonacci at 177.25. Of course, this channel bottom was higher in value at that time. It is dropping at a progressive pace. And on the daily chart, once again, it comes in at 170.19. Following the testing of this channel bottom, we've been mentioning how the descending 1/3 speed line that is presently at 207.99 should be considered a 3 to 5 week target. And so we are about 3 weeks into that right now. We could test that this week. I'll get to that in a moment. But I do think over the next 1 to 2 weeks, we should test 207.99. So long as we are holding above this rising 2/3 speed line that is based on that pullback low from early February against the more recent high from, last Monday? No. That was a week ago last Friday because we had a short week last week. Anyway, 189.65 you can see here, 3-star support, in reach today actually, able to contain weekly selling pressures, and once tested or above which, by the end of next week or sooner, we can reach our objective, our 3 to 5 week objective at 207.99, which we're 3 full weeks into presently. So that all fits. On the other hand, if we close today below 189.65, that actually indicates a good February high, which really isn't saying much because we're in the final week of February. But I do think then by the end of next week, over the next 1 to 2 weeks, we should fall back into the low 170s, upper 160s again, long-term support. So 189.65 is a kind of an evenly spaced pivot point between 207.99, our 3 to 5 week objective, expected over the next week or two above 189.65, and 170.19. And we would probably retest that by the end of next week if we close today below 189.65. I think that kind of outlines our 1 to 2 week time frame pretty well, and our 3 to 5 week time frame. Testing 170.19, we can rotate back to 207.99 within 3 to 5 weeks. I'll also mention that if we do take out that low from early February and actually test 170.19, we reconstruct this descending 1/3 speed line because it is based in part on that February low. I don't want to get into speed line construction, but I just want you to know that the 207.99 level will change if we happen to break the low from early February. And if we close today below 189.65, I'm expecting us to break that early February low. I think it's 175.01 actually, this minor point. 177.25. So let's cover the downside. That if we break or open today below 189.65, 185.77 is likely. I can tell you right now that 185.77 is nothing more than a 5/8 downside Fibonacci over the last several weeks. But if we do close today below 189.65, I see no good reason to be long Tesla if your time horizon is anywhere from 3 to 5 days out to 1 to 2 weeks, because over that time frame, I see the market clearly back on its heels, expecting 177.25 within the week. That would be a 3 to 5 day sell signal down to 177.25. And by the end of next week, we can unravel all the way back into the 168.82 to 170.19 region. 168.82 is once again that channel bottom on the weekly chart, where we could bottom out through March trade, even all of the second quarter, and return higher again, rotate higher again in the weeks and months to follow. I might as well tell you that, as I have been now for a number of weeks, that if we do close the week below 168.82 this Friday, and I don't see it happening, but it is certainly possible that over the next couple of weeks we do, especially if we settle today once again below 189.65, that if over the next couple of weeks we do happen to close below 168.82, that channel bottom, it does need to be by a full 1% margin. This week's level would be 167.13, and if we settled Friday at 167.13 or lower, we enter another 2 to 3 month sell signal, whereby I would anticipate the mid-90s to the low 100s. 94.95 is this former long-term channel top, and of course 101.81 is nothing more than the January 23 low. That would be our 2 to 3 month objective if we were to close below that area over the next couple of weeks. But let's get back to the day itself. 189.65 is likely today below 196.02. 196.02 is a 3-week channel bottom that did hold pretty well last week until Friday, of course, when we broke and settled below it. It is our intraday resistance. It may actually contain daily buying pressures, and below which 189.65 is expected today, where we could place a weekly low and once tested, round back up to the 207.99 3 to 5 week target within a week or two. We're 3 weeks into that 3 to 5 week target. So over the next week or two, holding above 189.65, 207.99 in reach. Let's continue with the upside today, that if we push or open, I would want to see a higher opening for this scenario. What I'm saying is if we push or open above 196.02, 201.81 in reach. You can see that if we open lower, that this 201.81 does change a bit. We're not offering intraday adjustments. So this formation is the formation that I'm comfortable anticipating this week, 207.99 if settled above. So 201.81 can contain session strength, and if we settle today above 201.81, we should tomorrow actually test 207.99. So there is a case to be made for the possibility of testing that 207.99 level this week, but we need to close today above 201.81 for that to happen. Until then, this is a decent resistance area for the day itself. This is also in line with the high settlement prices, this high area. So I do like this as day resistance. And once again, if we happen to push or open above 196.02, that 201.81 in reach today, able to contain session strength. This is kind of the day trade scenario. Selling 196.02, covering at 189.65, buying at 189.65, selling at 196.02, or buying at 189.65 and holding it for a week or two up to 207.99. Once again, if we close below 189.65, it pivots the market south to that 170.19 long-term channel bottom, once again, where we could bottom out through March, even through the second quarter. Is there anything else that needs to be said? Please click like, share, subscribe, all of the above. Check out wickedstocks.com. We offer a 5-day free trial. We offer 2 stock picks a week. We've got one coming out tomorrow, Tuesday. So check it out. You've got nothing to lose, really. You've got 5 days to examine everything that we provide, and then you can bow out at no cost if you don't really like what you see. But most people actually hang out for a while. We've had subscribers now who've been with us for several years. We started Wicked Stocks in 2021, so and growing. And I appreciate your support. All of the above, even if it's just clicking like, please do so. I'll be back tomorrow with Tuesday's Tesla report, and you have a great day.